We always ask Wall Street's brightest minds, what's the one word that's going to describe the trading day ahead? Lizzie Evans, what's your WEX word of the day?
My WEX word of the day is patience, and that might also be my word of the year.
Really? Okay, you got to explain this one. Why are you so patient in this day in particular?
Well, I think that certainly we're focused on the report this morning to see where PCE is. I expect that we'll see, it's our last read on inflation before the Fed meets in May. I expect that the next month that the Fed will raise 25 basis points. So really this is more a read on what the Fed will do in June. It's been a welcome reprieve to be in a Fed blackout period, to not have the volatility associated with Fed speak. But I think just in general, as an investor, this is a year that you need to be patient. And really that's also was true in 2022.
So does that mean you have money on the sidelines? And also I want to note the 2-year yield right now back above 4%. So does patience also mean that you're putting some money back into bonds as opposed to putting them in the market?
No. I think, right now, if you look at the market longer term, across the board, fund managers have 5.5% of AUM in cash, and you see the S&P 500, the 50-day moving average above the 200-day, and across the board, asset allocations are heavier to bonds, lighter on equities. So for all of those reasons, that's a good long-term buy signal on the S&P 500. To us, patience, if you think about, there's a great quote, Frank, that I love from Warren Buffett, and I also love it because I love fishing. So it is never test the depth of a river with both of your feet. So what does that mean? We're starting to see the Fed's indicating that they're not going to raise rates as aggressively as they previously stated. We're seeing inflation start to cool. We're in the midst of an earnings season that has not been nearly as doom and gloom as expected. But I think that you want to stay balanced. Now is not the time to make drastic shifts to your asset allocation. Now is not the time to make big changes to your equity positioning. You need to stay balanced. You need to stay patient, and it is a stock picker's market.
All right, so I know you're staying patient, but if you had to make a move today, it looks like you're eyeing the chip sector for opportunity.
Yes. So semiconductors, of course, are facing macroeconomic headwinds. But if you look at semis, and in particular look at Broadcom or AVGO, Broadcom is executing better than any of their peers, and they are trading at what we believe is a cheap multiple. So AVGO or Broadcom is 15 times forward PE. You compare that to the industry at 25 times and the market at 19 times. Those are great numbers. They have a dividend yield of 3%. Management boosted that dividend in December by 22%, and they've got another $12 billion in authorized share buybacks.
So while we're talking about chips right now, Lizzie, I want to talk to you about Intel. Obviously, some declines, but this morning investors don't seem to mind, up 4%. So why Broadcom as opposed to Intel?
Well, if you look at Broadcom, so we talked a little bit about the fundamentals and the shareholder capital friendly allocation model. You also think about AI. I think we are super early stages with AI, and in particular with Broadcom's Jericho 3 chip. So if you look at the spending, global spending on AI in 2023 is expected to be $150 billion. Mm-hmm. You compare that to last year, that's up 27%. And then fast forward 3 years from now, that's expected to be $300 billion. So we're super early stages there. Plus, Broadcom has a very diversified business model. So they've got the best profit margins. They're at 73% gross profit margin. That's a business I want to be in.